So, uh, how exactly do you judge a stock that is currently down like 51% over the past year? I mean, it is flashing serious macroeconomic sell signals everywhere you look.
Right.
But at the same time, major Wall Street analysts are aggressively slapping these strong buy labels on it
Hmm.
with price targets that imply just massive, massive upside.
Yeah, it really is the definition of a market paradox right
It
now.
totally is.
Because you're looking at a technical chart that's basically telling you to run for the hills, right? But then it's sitting on top of a balance sheet that suggests they've found, the holy grail of corporate treasuries.
Exactly. So today is April 17, 2026, and we were diving deep into Strategy Inc. The ticker symbol is MSTR.
And right now it is trading at about $151.25.
Right, 151.25. And we've got a massive stack of fresh market data to get through today. Financial reports, technical analysis, insider tracking, all of it.
Yeah, there's a lot to unpack here.
There is. Because our mission for you today is to cut through all this noise. We want to figure out if this stock is a brilliant backdoor play for institutional assets, or if it's, well, just a really dangerous value trap waiting to spring on retail traders.
And to understand why the market sentiment is so violently split on MSTR right now, we kind of can't start with the price action.
Right, we have to look under the hood first.
Exactly. You have to look at the underlying mechanics of their financials. Because when you look at their books, you are essentially looking at two completely different realities that are just trying to coexist.
Two realities is honestly putting it mildly. I mean, looking at their fiscal year 2025 and 2026 numbers, the core conflict is just glaring.
Oh, absolutely.
So the company brought in $477.23 million in annual total revenue.
Which, is a standard solid number for a legacy software company.
Yeah, exactly. It's fine. But then you look at their net income, and they posted a staggering net loss of negative $3.85 billion, with an earnings per share of negative $15.23. The operating cash flow is just deeply negative.
And those numbers are terrifying if you are applying, traditional valuation metrics to this company.
Right. It looks like a disaster.
It does. But those losses aren't actually coming from an operational failure in their software division. They are a byproduct of GAAP impairment charges.
Tied to their crazy Bitcoin acquisition strategy, right?
Exactly. It's tied to their hyper-aggressive crypto buys.
Let's actually break down the friction of that accounting for a second, because I think a lot of people see a $3.85 billion net loss and assume, the company's out there in the parking lot physically burning cash.
Right, yeah. They picture a dumpster fire.
Totally. But under legacy, generally accepted accounting principles, if the price of Bitcoin drops below what MSTR originally paid for it at any point during the quarter, they have to record that dip as an impairment charge.
Right, so it hits the income statement as a massive, massive loss.
But the kicker is, if the price surges back up, they don't get to write the value back up on the income statement.
No, they don't. Not until they actually sell the asset.
Which is wild. So that asymmetrical reporting creates what is basically a phantom hemorrhage.
Yeah, that's a great way to put it. The income statement looks like an absolute disaster zone. It's heavily skewed by the downside volatility of the crypto market, while it completely ignores the upside.
Right. Now, I know the Financial Accounting Standards Board has been shifting toward fair value accounting for digital assets recently.
They have, yeah. But the legacy of those massive impairment charges still totally haunts MSTR's trailing 12-month data.
So the income statement takes all the punishment on paper, but then the balance sheet tells the other half of the story, the Fort Knox half. Yes. Looking at their income statement is like looking at a tiny lemonade stand that's deeply in debt, but then you look at the balance sheet and realize the stand is literally sitting on top of Fort Knox.
It really is. I mean, they have total assets sitting at $61.4 billion.
Compared to total liabilities of only $10.60 billion.
Right. So that $50 billion spread is the buffer that's keeping the entire company alive. And that asset column is almost entirely dominated by Bitcoin.
Like a staggering amount of Bitcoin. 780,897 BTC to be exact.
Yeah, it's a hoard. And they acquired that hoard at an average cost of $66,384 per coin.
Okay, so meaning their total cost basis, like the actual cash they spent to buy it all, is about $33.14 billion.
Correct. But the current market value of those holdings, it exceeds $59 billion right now.
Wow. So underneath those terrifying net losses on the income statement is over $25 billion in unrealized profit.
Exactly. The core software business is, at this point, essentially just a shell.
Just generating enough cash flow to service the debt they took on to build that huge treasury.
Right. You would assume that sitting on a $25 billion unrealized profit would make the stock an unshakable fortress, you know?
You really would. But when you look at the actual trading behavior,
Ah.
buyers are terrified.
Yeah, they really are.
We are seeing a stock that's it's up about 14.5% over the last 5 days, hovering around that 151 mark, but it is still trapped in a brutal 51% macro bleed over the past year.
It is. And it's trading incredibly far below its 52-week high, which was $457.22.
That's a massive drop.
Huge. And more importantly, it is significantly below its 200-day simple moving average. That's sitting way up at $270.90.
So being that far below the 200 SMA, that confirms the dominant institutional momentum is still heavily downward.
Yeah.
Right? Even with this recent little 14% relief rally.
Exactly. The macro trend is undeniably bearish. But we are seeing heavy institutional defense at a very specific level, though.
The triple bottom.
Yeah. The stock has established a firm triple bottom zone right between $104 and $115.
So that 104 level is acting as an absolute floor right now.
Right. But all the friction is entirely on the upside. It's facing immediate resistance at 152, right about where we are trading today.
And there's a secondary supply zone too, isn't there?
Yeah, a massive one near $185. That's where a ton of trapped buyers are basically just waiting to break even so they can sell and get out.
And the momentum indicators explain that friction perfectly, don't they?
They really do. The relative strength index is currently sitting at neutral bullish because it's recovering from being deeply oversold at that 104 floor.
But this isn't like organic, aggressive long buying.
No, not at all. The order flow shows what technical analysts call a weak base structure.
Because buyers simply do not trust the foundation.
Exactly. They step in really anxiously when Bitcoin dips because they want to catch a discount on MSTR. But the moment the stock rallies...
They aggressively sell into that strength to take profits.
Right. Nobody wants to hold the bag over the weekend.
Yeah, the market psychology is entirely risk-off. The price just hasn't spent nearly enough time consolidating at these lower levels to build the conviction they need to smash through that 185 supply zone.
And that lack of conviction isn't just a retail problem. That's the crazy part.
Oh, right. It is happening inside the company itself.
Yeah.
Because insiders currently hold roughly 8.46% of the shares. And if you track their recent moves, the boardroom is completely fractured on where this stock is heading.
Which is wild because insider activity is usually a leading indicator. But right now, it's like a Rorschach test.
Yeah, look at Director Jared M. Patton. In April 2026, like this very month, he has been aggressively offloading shares.
Dumping a lot, yeah.
He's dumped over $1 million worth across multiple transactions.
Yeah.
But then you rewind just a few months to January 2026, and another director, Carl John Rickerson, bought roughly $779,000 worth of stock.
So you literally have one director buying heavy and another director dumping heavy.
Right. If the insiders are giving us mixed signals, who exactly is driving this anxiety?
Well, if we look at the timeline, we can actually kind of deduce the logic behind those conflicting moves.
Okay, walk me through it.
So Rickertson's massive buy in January was likely him front-running the early Q1 crypto momentum. He was anticipating institutional ETF inflows spilling over into MSTR.
That makes sense.
But then Patton's April selling, that looks very much like risk-off behavior ahead of a highly uncertain catalyst, because we have a major earnings call coming up on May 5th.
Oh, right. So Patton might be, tax loss harvesting or locking in gains because he knows the software revenue might show some weakness.
Exactly, which would expose the risk of their debt servicing capabilities to the broader market.
And that is exactly the kind of boardroom hedging that bleeds directly into Wall Street's inability to price this asset.
Yes. When the directors are hedging their bets, it creates this really directionless, anxious trading environment.
Which fuels the massive valuation debate we are seeing among institutional analysts right now. Is it undervalued or is it a trap?
It's the ultimate existential debate for this stock.
Right, because the official consensus rating from analysts is a moderate buy, with an average price target of $350.20.
Which, by the way, implies a staggering 135% upside from today's price.
Yeah, but the extremes of those analyst targets show a complete breakdown in traditional financial modeling. I mean, the highest target is $705.
And the lowest target is $54.
It's just absurd.
It is, because traditional discounted cash flow models are basically useless here. You just can't value MSTR like you would value Oracle or Microsoft anymore.
Right. Wall Street is trying to price a legacy tech firm that operates like a rogue, highly leveraged sovereign wealth fund.
That is exactly what it is. Now, the bulls, they argue that MSTR serves a completely unique, heavily fortified function in the market.
That it's a premier vehicle for institutional Bitcoin exposure.
Right. And you might say, well, we have spot Bitcoin ETFs now. But if you are a massive institution deploying billions of dollars, those ETFs come with management fees.
Which slowly bleeds your returns year after year.
Exactly. Holding MSTR gives you that exposure without the ETF management fee.
But more importantly, it gives you leveraged exposure, right?
Yes, because MSTR issues corporate debt to buy more Bitcoin. So the stock acts as the synthetic multiplier.
So bulls look at that structural leverage, they look at the 151 price tag, and they think it's a massive market inefficiency just waiting to correct upward.
That's the bull case. But the bears are looking at the market to NAV premium, and this is where the entire bull thesis starts to crack.
Okay, let's explain the NAV premium for a second. So NAV net asset value is just the total value of their Bitcoin divided by the number of shares, right?
Right, it's just the baseline value.
And historically, MSTR has traded at a massive premium to its NAV. At one point, investors were willing to pay a 3.89x premium.
Meaning they paid almost $4 for every $1 of actual Bitcoin the company held.
Which sounds insane. Why would anyone do that?
Well, that premium existed because before the spot ETFs were approved, MSTR was kind of the only game in town.
Ah, right.
If a mutual fund or a pension wanted Bitcoin exposure but wasn't legally allowed to hold raw crypto, they had to buy MSTR. So they gladly paid the premium for the regulatory wrapper.
But now that premium has severely compressed. It has dropped from 3.89x down to just 1.17x today.
And the bears argue that capital is rotating out of MSTR and into the frictionless ETFs.
Right, like why pay a premium for a software company, proxy, when you can just buy BlackRock's ETF at net asset value?
Exactly. So the bear thesis is that MSTR will continue to bleed until it trades perfectly flat with its Bitcoin holdings, or honestly even at a discount due to the corporate debt burden.
And that debt burden is the exact mechanism that traps retail traders here. I mean, let's talk about the beta. MSTR has a beta of 3.56.
Yeah, that is a wild metric.
For context, the broader market operates at a beta of 1. So a 3.56 beta means this stock is exponentially more volatile than the baseline.
It's like signing up for a scenic train ride but getting strapped into a high-speed coaster instead.
Exactly. People hear leverage and they just think goes up faster. But MSTR's leverage isn't just riding the Bitcoin wave. It's like they've mortgaged the surfboard to buy larger waves.
Right.
When the tide goes out, they don't just sink. They still owe the bank for the water. That $10.60 billion in liabilities acts as a massive anchor during Bitcoin drawdowns.
Yeah, and if you treat this like a traditional software play, you will get violently shaken out of your position.
So if the premium is compressing and the debt is static, that changes the entire risk profile for the rest of the year.
It really does.
Let's lay out the horizons based on the data. If I am looking for the best case scenario for the rest of 2026, the bull case hinges on their financial engineering continuing to outpace their debt.
Right, and MSTR currently has a Bitcoin yield of 5.6% year to date.
That yield metric is super crucial, isn't it?
Very. It means through their capital market maneuvers, they are actually increasing the amount of Bitcoin per share of the stock.
So they aren't just hoarding. They are actively growing the ratio of assets to equity.
Exactly. And the mechanism they are using to do that right now is a transition toward stretch preferred shares, or STRC.
Okay, because historically, they would just issue more common stock to buy Bitcoin, which obviously diluted the value of existing shares.
Right, which hurts retail. But by utilizing STRC, they tap into institutional credit markets without immediately flooding the retail float with new common shares.
Because preferred shares sit higher in the capital stack, right? So they act more like debt, until very specific conversion triggers are met.
Yes. And this protects the common equity holders from immediate dilution. So if they can continue to raise capital this way and Bitcoin enters a macro bull run, the leveraged position on their balance sheet could send the stock price absolutely parabolic.
Justifying those crazy $700 price targets.
Potentially, yes.
But the bear case provides a massive, flashing red counterweight to all of that. Aside from the debt multiplier volatility, the most critical bearish signal in the data is what analysts are calling the fractured correlation.
Yeah, this is the scary part, because for years, MSTR moved in lockstep with Bitcoin. It was the perfect proxy.
But since late 2024, that correlation has been fracturing.
We are seeing days where Bitcoin is up 3% and MSTR closes red.
And the correlation is breaking down because the market is finally pricing in the ETF capital rotation, plus the sheer weight of their debt servicing.
Exactly. And if MSTR stops moving with Bitcoin, it destroys the foundational thesis for owning the stock.
Right. If you take on the 3.56 beta risk, and you pay the NAV premium, but the stock ultimately underperforms raw Bitcoin, I mean, the entire corporate strategy fails.
It does. If that correlation permanently breaks, the stock could plummet to its intrinsic software valuation, regardless of what Bitcoin does.
So looking at the actual price projections from our sources, the short-term outlook is this cautious, highly conditional path to $179 by late April.
Provided, of course, that Bitcoin itself doesn't test lower support bands.
Right. And long-term projections into 2027 point to targets as high as $870.
But anyone tracking this needs to understand that an $870 target is heavily contingent on a parabolic, multi-trillion-dollar Bitcoin cycle.
Yeah, if Bitcoin simply trades sideways, consolidating for the next 2 years, MSTR's debt servicing costs and that continuing NAV premium compression will almost certainly drag the stock down.
Absolutely.
So we have two major catalysts coming up that could tip the scales and break this 104 to 152 trading channel. First is that earnings release on May 5, 2026.
Right. And the market isn't going to care about new software clients during that call.
Not at all.
They are going to scour that report to see exactly how the company is managing the interest payments on that $10.6 billion in liabilities.
They need to see whether the software revenue can actually cover the carrying costs of the Bitcoin treasury.
Yes. And the second constant catalyst is their actual treasury deployment. MSTR frequently drops these unannounced press releases stating they just acquired another $800 million or $1 billion worth of Bitcoin.
Just out of nowhere.
Yeah. And every time they deploy capital like that, it acts as a massive shock to the order flow, forcing shorts to cover and temporarily spiking that RSI we talked about.
Wow. Okay, so to pull all this together for you, Strategy Inc. is executing the most extreme high-wire act in modern public markets.
No question about it.
They are balancing multi-billion-dollar GAAP accounting losses against a $59 billion digital asset vault. The stock is caught in this violent tug-of-war.
You basically have retail traders dealing with intense anxiety at the 152 resistance level, while institutions maneuver around the collapsing NAV premium and the complexities of STRC share issuance.
It is the ultimate test case of leveraged financial engineering colliding with highly volatile digital assets.
Truly unprecedented.
But looking at the broader implications of what MSTR has built here, they essentially pioneered the concept of a publicly traded company treating Bitcoin as its primary treasury reserve.
They wrote the playbook.
They did. Which brings up a fascinating risk that literally nobody is pricing in right now.
Oh.
What happens if MSTR is too successful? If this playbook becomes the gold standard, what happens when a mega-cap giant with infinite cash flow, like Apple or Google, decides to replicate this exact model?
Oh, wow.
Right. If a $2 trillion company turns their treasury into a Bitcoin vault, does MSTR lose its only unique market advantage overnight?
If Strategy Inc. was built to be the ultimate high beta proxy for Bitcoin, but that correlation has been fracturing since 2024, what happens to a proxy stock when it suddenly takes on a mind of its own?
Exactly. That is the existential threat to the whole model. Definitely something to keep in mind the next time you look at that 3.56 beta. Thanks for joining us as we unpack the data today. We will see you on the next deep dive.